So in this video today, what we're going to talk about is home buying 101. Now, some of you guys are like, oh, home buying, I've already bought 15 homes in my lifetime. And some of you have, and that's totally cool. Some of you guys have never purchased a home at all. But what's great is always to get a refresher of what it's like to buy a home. And then also with the market being the way it is, it's always nice. And I always update these every time there's a new situation in the market. Obviously, right now, 2021, it is currently a seller's market. So there's a few things that you want to do as a buyer that can really help you get your offer accepted. And if you're also an agent watching this, for those of you that are having troubles getting your offers accepted, there may be something in this video that you find super helpful, and I hope that it does. So either way, stick with me here through the video, and here we go. Hey, what's going on? Welcome back to Living in Laguna Beach. I'm here in my studio today, and I wanted to bring you this great video. And my name is Ryan Huggins, a local Laguna Beach real estate agent and the host of Living in Laguna Beach. If this is your first time to the channel and you want to learn about everything there is to living in Laguna Beach, make sure you hit that subscribe button and click the notification bell so that way you know every time we post a new video. If you're thinking about moving to one of the cities that we talk about here on this channel, feel free to shoot me a call, text, or email, and I will get back with you. Every single day, we get people just like you moving to Laguna Beach or the surrounding areas, and that's what we do. We love helping people relocate to this area, and we are here to help. So if you ever need anything, my contact information will be down in the description or also right here at the bottom of the screen. So here we have our Home Buyers 101, the ultimate guide to buying a home in Orange County. Now, if you are like me and you like to listen to things and learn, you like to watch things and learn, but you also like to read things and learn, I completely understand. So if you want a copy of this right here, I will be happy to send it to you. One, you can email me. As you can see, my email is right here on the screen. Or two, you can also reach out to me on Instagram. And the Instagram account, we'd be glad to have you follow us anyway. We're always posting great content about South Orange County. The Instagram account is called Living in Laguna Beach, and you'll see a picture of my bald head there, so you'll know that it's the right account. So again, my name is Ryan Huggins. I'm a realtor here. I'm with eXp Realty. That's the brokerage that I represent. You can check out my personal website right here. And then also here's my cell phone number and also my email. So if you want to reach out to me, I am available to you. I offer 100% communication with my clients. I can't tell you how many clients have talked to me and they're like, oh my gosh, my realtor never answered or anything like that. So that's my main focus, is to help people. That's why I also do these videos, to keep in touch with all of my clients and all of my friends and all of my circle of influence. So your home buying adventure starts now. First off, with just watching this video, it's going to help you, right? Because you want to be educated in this market and know what is going on when you're going to buy a home. So as it says here, dear home buyer, welcome to one of the most exciting moments in your life. Also the scariest moment probably, right? Because this is the largest purchase that you're going to make in your lifetime. And this may be your first time, like I said before, or this may be your fifth, but it still gives you that little bit of excitement and a little bit of nerves. So I completely understand. So your home isn't just a roof over your head. It's where you eat, sleep, raise your family, and also build your life. I've created this guide to walk you through all the important steps that you need to take in order to get the most out of your home buying experience. If you have any questions, please do not hesitate to contact me. Sincerely, Ryan Huggins. And again, if you would like a copy of this, I'd be more than happy to send it your way. So step number one. So what is step number one? Is choosing your realtor. And actually step number one and step number two can be flip-flopped. And it doesn't really matter which direction you go. However, step number one, choosing your realtor, is probably the best way to do it. Because step number two, I'll just go ahead and let you know now, is finding your mortgage broker or your loan. Some people just go to their bank. We'll talk about that as well. So step number one, choose your realtor. Hey, thank you for choosing me, Ryan Huggins. I am now your realtor. So even if I'm only your YouTube realtor, that's totally fine. If you're subscribed to the channel, you're going to learn a lot about buying a home, selling your home, things of that nature. And I'm glad to be your YouTube realtor. But also, if you are living anywhere in the country, I have over 54,000 agents in my network I can help you out. If you're in Idaho and you want to sell your home, reach out to me. I can actually help you sell your home there with a great agent, and you can interview some people and let them know, and let me know if you like their personality. I can help you. If you're in Florida, New York, it doesn't matter. But finding me was your best thing that could ever happen to you, because I can help you anywhere and everywhere. So here we go. Start by hiring a pro Orange County realtor who works exclusively for you. So personally, I'm born and raised here in Southern California, Orange County specifically. I've lived everywhere in Orange County, North Orange County, South Orange County, currently live in Laguna Beach, as you guys know, and I am very versed in everywhere in Orange County. So if you want to, move up north to Brea, La Habra, something like that, it's fine. You want to be in Whittier, you want to be in, that's more LA County, but I've got connections over there. If you want to be in Anaheim, you want to be in Huntington Beach, you want to be in Corona del Mar, Laguna Beach, whatever, I can help you out. So just let you know that right up off the bat. Now, I do know the market. I know about the neighborhoods that you didn't even know existed around here. I obsess over prices, property values, and the latest, hottest listings. I access historical data, and I keep up to date with builders and new developments as well. I do a lot of problem solving. I negotiate. I go to scary basements and make sure my clients don't buy the wrong home. So my goal is to always make this process as quick and seamless as possible. So this means being real and transparent through the process, and also being responsive and available to you. Buying a home is one of the biggest transactions that you'll make in your life. So get the time and attention of a competent agent. So now that you found me, your YouTube or realtor, now we got to get financing. So this one's we're gonna take a little bit of time on this step here. So step 2 of financing, again, you can get this done first and then go find a realtor. That's totally fine. But you do want to have financing in place. So we'll go through this, and as we cover a few things, I'll also cover a few things at the end of this as well. So step 2 is get financing. Now, this is really the scariest part, because a lot of people don't want to feel that pain of getting turned down. They think that they have to have an 800 credit score to get approved, and that's not the case. In fact, people right now with 610, 620 credit scores are still getting approved with loans of 3% and less, right? So right now, if you're not aware, this is 2021. We're at the end of June. We still have the best interest rates in my lifetime, personally, that's ever been around. So people are even overpaying for the home in what they consider overpaying. What I mean by that is they're paying over the price, the list price, but they aren't worried if there's a little correction in the market, it goes down, because long run, their property value is probably going to go up, right? I'm not a financial advisor, but property values go up and down. But to lock in an interest rate this low is what's really exciting. And that's also what has been spurring the home buyer boom, and why so many people are buying right now, is because they have an opportunity to get in at a rate for a very, very great interest rate. So there's types of mortgages. There's the conventional mortgage, and this is the most common type of mortgage. Your lender will loan you up to 80% of the purchase price of the property, or its appraised value, whichever is lower, and you have yourself the other 20% as a down payment. So right now, let's say, for example, you want to buy a $100,000 house. We're just using these numbers for numbers, make it easy. You had to put, if you wanted to buy a $100,000 house, you would put $20,000 down. The bank would be able to loan you 80% of that, which would be the other $80,000, which is what you would have your loan on. Okay, so that's that part of it. There's also a high ratio mortgage. And if you don't have at least 20% down payment needed to get the conventional mortgage, a high ratio mortgage can advance you up to 95% of the home's purchase price or appraised value. However, you'd be required to purchase mortgage insurance, not to be confused with homeowners insurance, and the amount of which you would be added to your mortgage principal. Now, some people are proponents of either one of these, right? Now, let's talk about the benefits. Right now, if you have 20%, you just been stockpiling cash, you have some liquidity in your bank, or you have a 401k that is, gained a lot of potential value in there, and you could put 80% out of your 401k or your Roth IRA or your regular retirement account, and then you could do that, definitely do it, right? If you're buying a home with over $1 million purchase price and you're going to need a jumbo loan, depending on, usually they start about $1 million for a jumbo loan. With that, you're going to need to put a higher percentage rate down. We don't know until we speak to a mortgage broker, but just giving you that heads up. On the high ratio mortgage, anything under $1 million, it makes sense to do the 5% down, because most people don't have the 20%, and pay the mortgage insurance, because over time you can actually end up paying down enough of the home and you can renegotiate the mortgage insurance and actually remove it if you do it properly over a 5 to 10 year period, where it actually will help you out in the long term. Okay, so there's conventional, where you put down 20%, or there's high ratio mortgage where you put down 5%, which sounds better to you, right? So they're both great options. So term and amortization. Now, this is where it could get a little confusing for some people. A mortgage term is the amount of time a lender will loan you the money for, typically for 6 months to 5 years. And when that term is up, the remaining amount is payable in full unless you arrange new financing for another term. Because few of us can pay off an entire mortgage in even the 5-year term, lenders calculate or amortize the mortgage payments over a much longer time, often as long as 30 years. So that's why you've heard 30 years fixed, 30 years flexible, 30 years adjustable, things of that nature. They aren't loaning you the money for a 30-year period. They're simply calculating the payment schedule as if it would take you that long to pay back your mortgage. So you will likely renew the mortgage at the end of your term with your amortization period. All right, so now let's talk about that interest rate that we were talking about a little bit, right? And then, of course, we were talking about this, understanding your options. When determining which mortgage best suits your situation, there are some basic decisions that you'll need to be made. Okay, and then we talked about type of mortgage already, term and amortization, and now let's talk about the interest rate. So your mortgage rate is made up of two components, principal and interest. Essentially, interest is the cost of borrowing your money. So we used our first example of buying a $100,000 home. You put down $20,000 on the $100,000 purchase price, 20% or $20,000, and then you borrowed $80,000. So the interest would only be applied to the $80,000. So when it comes to interest rate, fixed rate is you agree on an interest rate with your lender, and this rate gets locked in for a term of the mortgage. A fixed rate mortgage is great for an economy where bank's prime rate is increasing, but undesirable if the going rate is decreasing. So as we know right now, it is at like the bottom. That is why people are like going as fast as they can to get loans to see if they can buy a home. People would rather live in a home, get some appreciation, get some equity building than living in their apartment that they were living in, which is completely understandable. The other option is the variable rate. Your interest rate fluctuates with the bank's prime interest rate. Your monthly mortgage payment amount stays the same. However, if the prime rate falls, more of your payment goes towards the principal and less goes towards the interest. If the interest rate rises, less of your payment goes toward the principal and more goes toward the interest. So what does that mean? Well, we borrowed $80,000. Let's say that your interest rate is 3% right now, and you got a 3% fixed. Well, you'd pay 3% interest over the entire course of the loan, okay? Variable rate, so let's say that you locked in right now at 3% and you got a variable rate, and then the prime rate starts to go up, and now all of a sudden you went from a 3% interest rate to a 5, 10, even 15% interest rate. Your payment stays the same, meaning let's say that your payment was $500 a month for an example, right? You're paying $500 a month. Well, you would still be paying $500 a month, but more of that percentage would be going towards paying off the interest on your loan as opposed to going to pay the principal of the loan. And remember, the principal of the loan is that $80,000 that we borrowed. All right, so now that we know a little bit more about the loans and all of that good stuff and where you should be headed for that, Let's talk about shopping for a lender. So most people believe that their best lender is the bank that they already have an account with. They're persuaded by the ads in the branch walls about consolidating their services with the same provider. And personally, I've always shopped for my home loan using a mortgage broker. So let's say that you bank with Wells Fargo. You go into Wells Fargo, you see on the wall, they always have signs, get your car insurance with us, your home insurance with us, your home loan with us, your car loan with us, and you can merge them all together, and then you get a lesser bill. But in reality, that Wells Fargo has a rate that they have to get for their loans. So keep that in mind, right? They're not going to be negotiating with other banks to get a lesser price. So let's talk about mortgage brokers versus banks. The big banks have only a limited access to their own mortgage rates and terms, and they'll post posters of discounts on their rates, but you are responsible for negotiating these rates with that banker. On the other hand, a mortgage broker, they have access to multiple lenders, mortgage products. They have access to banks, private lenders, all kinds of different people when it comes to getting a loan. Also, they can help people with different situations. Some people are self-employed, so they have to have a different way of showing their income. Some people are low income, they have different programs. So a lot of banks don't go through all of that. They want to just make it quick and easy. So having a mortgage broker, they help you with a lot of different things. They'll shop around for the best mortgage terms tailored to your individual circumstances. They negotiate for you, and they present you with the lowest rate on the market. The broker's fees are also paid by the financial institutions who services your mortgage. So it is a good thing and a good way to comparison shop without actually doing the work yourself. And yes, you read that right. Their commissions are paid for by the lender, so their services to you are free. And here's the mortgage broker that I recommend. Right now, I have two, but depending on where you're at, I have other mortgage brokers. So just reach out to me. Like I said before, shoot me an email, call me, or text me. Or you can also reach me on Instagram, Living in Laguna Beach on Instagram, and we can discuss things there. All right, now here's the fun part. Getting pre-approved for your mortgage. Your broker will help you get pre-approved for a mortgage to give you the confidence of knowing how much that you can afford. And this in turn will help you know the price range of homes that you should be focusing on in your search. So for example, let's say that you wanted to buy a home in Laguna Niguel, okay? And you wanted to buy a home in what price range? You don't really know. You're just like, hey, I want a 3-bed, 2-bath, find me one. Hey, there's 3-bed, 2-bath condos, townhouses, houses, single family homes. Do you want a fixer? There's all kinds of different things. All of those things have a different price range. So getting pre-approved will know, okay, I can buy up to 800,000. I can buy up to 1.2 million. Heck, I can buy up to 400,000. Whatever the case, it doesn't matter what your buying power is. You just need to know what your buying power is, so that way it is buying power for you. A mortgage pre-approval will be in writing. Generally, they are valid for 90 to 120 days and will require you to prove your income and your credit history. If you don't have something in writing and you haven't provided financial documentation, then you likely don't have a mortgage pre-approval. So what that means is sometimes you can be speaking to some mortgage brokers out there, or you call like, Quicken Loans or something. They're like, oh yeah, you're pre-approved. You should be approved for this much. And they just kind of give you an off the wall number or whatever, but they don't give you an actual written letter. You need the written letter for it to be for sure proof for you. And also going forward right now in this market, with it being a seller's market, you actually need it to get in the door on about 90% of properties. So I do a lot of showings with clients who are not pre-approved yet, and we've been turned down. So I've got all of the information. We get ready to go see a property, and then they're like, hey, send me the proof of funds and send me their pre-qualification letter. And then we're like, oh, well, we don't have a pre-qualification letter. They're like, hey, no thanks. And I'm like, hey, look, my client has the proof of funds. We can show that we're going to be able to buy a home. They're not wasting their time, because right now, some of these homes, these sellers are getting 20, 30 offers on one property, literally. And so they don't want to waste time with people who don't have the ability to buy. Even though you might have the ability to buy, you just can't prove it. So getting this quick, easy Pre-approval helps a lot, and it's going to go a long way. And it's also going to help you with your realtor as well. It puts a lot more ease for your realtor to get you into the home that you really want to go see. So ensure that you have a pre-approval before embarking on your home hunting journey. Knowing how much your lender is willing to loan you will eliminate the risk of uncertainty of being able to obtain financing once you find your perfect home. So that's another thing as well. Let's say that you were allowed to go view a home today, and it's one that you really love. You don't have your pre-approval letter, and this is the day everyone goes to see the home. Let's say it's a Saturday, it's an open house, and the offers are due by Monday. Those offers that are going to be submitted by Monday, that house that you fell in love with, like literally, this is my house, I'm going to buy it, is gone. You don't even have time because you don't have the pre-approval. If you have the pre-approval, we can call your lender, we can get you approved that day. All right, step number 3, go shopping. Now, this is actually the best part. So let the fun begin, as it says here. You've picked a pro Orange County realtor, and that's who you're going to be working with, and you've been pre-qualified for a mortgage. Now it is time to start looking for your new home. So let the fun begin. So create your wish list. And this is something I really encourage for my clients. Like, start envisioning yourself. Like, one, I'm really big into manifesting and bringing things to life, but you can literally start to like visualize the home that you want to live in and put those things together. So what are your needs versus your wants? How many bedrooms must you have? What kind of finishes are you looking for? Do you need a large yard for your dog? A great school for your kids? Of course, in a hot market like California's, compromise is part of the process. You know, would you rather live in a bigger property or a closer to downtown? Are you okay spending money for something turnkey, or could you do with a fixer-upper and do the renos yourself? So talk to your agent, what's most important to you, and let them know that. So now that you have your wish list, what we want to do is we want to screen the listings online. And our home search tool allows you to set up a custom home search that instantly notifies you as soon as a property hits the market that matches your exact criteria. It's pretty awesome, right? In fact, right now, we could go through your criteria, type it in, there's boom, automatically houses on the market. We don't even have to wait. We can go and I'll send you 3, 4, 5 houses. Sometimes the list is as big as 15, depending on how picky you are. It could be bigger or smaller. So you can also explore the latest listings and get a feel for what's for sale in your area. You can preview the properties electronically and ask your realtor questions about ones that pique your interest. You can visit my website at exprealty.com. That's my broker's website. Or you can contact me directly and I can send you a private list. All right, so let's talk about some big decisions here. Should I buy a home? Well, the most important factor to consider is your personal financial health. How much can you comfortably afford without giving up your life? Although buying a home can be a smart investment because your equity grows tax-free, don't forget about the utilities, property taxes, and ongoing maintenance costs as well. Evaluate your financial situation and be honest with yourself. If you're considering renting or having a subpar credit, get in touch with me to help you evaluate your options. Now, there's another thing too, when it comes to getting your loan or getting approved. I also have a credit repair company. So if for some reason you feel like you'll never be able to buy a home because you're having a credit issue, you can also reach out to me very discreetly. I'll be able to set you up with my partner company that does credit repair, and they do a phenomenal job. I personally have used them on a couple of things, getting those hard inquiries off of your account, removing negative things that weren't supposed to be there, or even if they were supposed to be there, but you want to remove them, there is a way to get that done. So I can definitely help you with that type of stuff as well. Also, when it comes to renting versus buying, just so you're aware, if you are already renting somewhere and you wanted to buy, well, the rule of thumb is for every $500 that you're spending on rent, it is equal to about $80,000 to $100,000 worth of a mortgage. So let's say, for example, you're paying $2,000 for rent right now. Well, 2,000, how many 500s is that? That'd be 4. So you could buy close to a $400,000 house, depending on your credit and interest rate and all that, which we would find out. Also, let's say, for example, you're paying $5,000 a month for rent. You have a larger home or whatever the case may be. $5,000 a month in rent would be equivalent to about $1 million home that you could be buying instead of renting for $5,000 a month. So just keep that in mind. So should I buy or sell? Well, if you've already owned a home and are contemplating whether to sell it or buy a new home first, the answer depends on what kind of property that you currently live in and also where it's located. If you're in a high demand neighborhood, downtown home, or a unique condo, you'll likely be able to sell it quickly. If you're in a less desirable area or building, selling may take 60 to 90 days. In this market, more like 15 to 30 days, but you'd be better off to sell before buying if you have something that you think is in shambles. Now, when it comes to working with me, you're lucky enough if you had an absolute dump and this is the worst house ever. In fact, if you have 2-3 houses that are currently rental properties, you don't want them anymore. As I said before, I work with investors. We can buy any house for cash today. So keep that in mind as well. So if you're looking to really move the house before you sell or before you buy your next home, I can have that done for you within 30 days. No problem. Closed. All cash offers. The other big factor to consider is your financial resources. So can you afford to carry 2 mortgages if your current home doesn't sell? So while there's no right or wrong answer, the goal is to make sure that you have realistic expectations and a plan that works for you and also your family. So let's chat to discuss various scenarios based on current market conditions. Step number 4, put in the offer. So you found the one, now lock it down. So your house hunting efforts have paid off. You found a home that satisfies your wants and needs, is in the right price range, and it feels just right. Have your deposit ready. A deposit is paid by the buyer to the seller to let them know that you are serious about making the purchase of the home, and it is also part of the final purchase price. Why do I need a deposit? Because it does provide security to the seller. A deposit ensures that the buyer has a stake in the agreement and something to lose if they don't close on the deal. So the reason being, let's say, for example, some people do this, right? They go out, they say, I'm going to buy your house, and they put down a deposit of, usually it's 3% of the purchase price. Well, that person is serious. If someone doesn't want to put down a deposit, that shows that they have potential cold feet. They're not really serious about the purchase and so on. So sellers really take that as a necessity. So depending on your local practices, one may be requested along with your offer or within 24 hours upon acceptance. In Orange County, a typical deposit is around 3%, like we were just talking about, of the purchase price, which is held in a trust until closing. All right, now it is time to actually submit the offer. So we begin by drafting an agreement of purchase of the sale, an RPA, and this is the official legal document which outlines everything from the price that you're prepared to pay to the inclusions you want. If you want the appliances, certain light fixtures, to your preferred closing date, the date that you want to take possession of the actual home, to conditions that need to be met for the deal to go through. So maybe there's something you need to negotiate. Maybe there's a problem with this, or there's something with that. We can negotiate that in there, or vice versa. If the sellers are like, hey, we have 15 offers, what are you bringing to the table? You'll really want to make sure that you have a agent who's worked with buyers and knows how to put in a strong offer. And there's a few little things that you can tweak and tailor in your offer to really make it stand out and get it accepted. One of the most commonly included conditions is the financing condition. It's used to protect you as the buyer by telling the seller that your offer to buy the property is conditional on you obtaining financing. So meaning you've got a pre-qualified letter, yes, but you have to go through some other steps in the process to get the final loan actually approved. Let's say that you got to the very end and then the loan won't get approved. Well, you would be able to then back out of that deal, and then the seller would try to sell to somebody else. You would also get your refundable deposit back because you used that as a clause in your contract. While the legal wording may vary from contract to contract, a well-worded clause states that financing obtained must be satisfactory to the buyer in their sole and absolute discretion. This means that the terms and conditions of the financing obtained, interest rate, payments, etc., must be satisfactory to you, the buyer, not just that you were able to obtain financing in general. Because I mean, what if someone gave you, right now everyone's getting a 3% interest rate. We're like, yeah, we'll finance you at 20%. That wouldn't be something that you'd be comfortable doing. So you would just decline the offer. All right, after that, we've got the offer in. Now it's time to powerfully negotiate. So once you've submitted your offer, the seller can either accept it, reject it, or counter it. And during these back and forth negotiations, you may need to compromise on small things, but a savvy realtor will work hard to get you what you want. And we do that a lot. So what's interesting on the market currently right now, I've been working with buyers that we went and saw one home and we put in an offer. It was accepted literally the same day. I've also worked with clients where we went and we saw two homes. We put an offer in on one home and it took a week for them to finally accept it because there was just like a lot of offers. They were sorting through it. I have another client that I worked with for 6 months. We just got her finished up, but we went out and saw about probably a total, around her work schedule. We'd go on the weekends. We saw probably about 10 homes total. She really fell in love with 4. So we put offers in all 4 of those. She got outbid on 3 of them. And then on the 4th one, we finally got the offer. I mean, and it doesn't matter how powerful of a negotiator you are when someone outbids you by $100,000 on a $500,000 house. There is, and $100,000 over asking price. There is no negotiation there. That's obvious. I would have taken the money as well, especially when it was, they waived the appraisal contingency. So it's just absolutely insane with the market. That's why you have to have a great realtor that knows how to make the proper offer. Also found making a great relationship with the agent on the other side is really the most important thing as well. All right, so now we need to meet conditions. So in your offer, you may have included, for example, a financing condition, a home inspection, or an appraisal review, which we do all of that. Okay, so all of my buyers, when we go through this, and unless you wanted to waive these things, but we do a home inspection. Even if you're a brand new construction buyer, we still do a home inspection. We also get the appraisal, because if you, let's say we were buying that $100,000 house and we get a loan for $100,000, but the appraisal comes back at it's only worth $80,000. Now the bank will only lend you up to 80% of $80,000. So you would have to cover the difference in your own money there. So what happens to your deposit if you don't fulfill a condition? If your offer was conditional, i.e. getting financing, but your bank doesn't approve you for the mortgage, then you get your deposit back. There is an expectation and an obligation to act in good faith. You can't just wake up the next day, change your mind, and use the financing clause to get out of a purchase. A deposit is returned only when the agreement of both the buyer and the seller. So if the seller doesn't believe you acted in good faith in fulfilling a condition, they can refuse to release the deposit. But they have to, this is like a legal matter though. They can't just be like, no, I'm keeping your deposit. Like they would have to have legal grounds to not release it, just so you're aware. If your purchase was not conditional on financing, or you previously waived that condition and you are now unable to obtain financing, that spells serious trouble. You forfeit your deposit and risk being sued for additional damages. So what that means is if you waived your financing condition and you weren't able to get the loan, they would keep your deposit. Not to say this doesn't happen, but with my clients, we're very, very careful on all of our offers and the way we word them and the way we put them out there. So it has not happened to me. All right, step number 5 is the close. So as soon as your offer is accepted, your deposit is submitted, and there are no more conditions to be fulfilled, you will have a firm agreement and the closing process begins. Closing is the point at which ownership and possession of the property are transferred from the seller to you. And at this point, you will be in close contact with your lender and or lawyer. You'll need to sign a ton of paperwork and of course, provide payment for your new home. That's once all legal and financial obligations have been met, then pick up the keys and a bottle of wine because congratulations, you've just got yourself a new home. So ready to get started, send an email to me, ryan.huggins@exprealty.com, or call me 310-795-8098. Don't forget to add me on Instagram as well, living in Laguna Beach on Instagram. And I really look forward to helping you buy your next house and or sell your next house. If you're looking to sell, I can help you as well. And again, I am nationwide. I can help you anywhere and everywhere you are. So talk